episode 5 of Value Stack. My name is Bo, also known as Shaper Funds, and I am here with my esteemed co-host, BTC BAP, also known as Zach. Zach, how's it going?
Dude, I'm pumped after the meetup last night. It was a good time. A lot of local Denver people showing support for the Bitcoin community during what some would call a bear market. 50% drawdown doesn't seem like a bear market to me anymore, but met some great people and had some conversations with people who were more into like DeFi. And so it was humbling to have to kind of reaffirm and re-explain everything and make sure that I still knew why I was Bitcoin only. So, but yeah, man, it was a good time, dude. You were there too. What was your take on it?
Yeah, that was awesome. Really cool group of Bitcoiners here in Denver, and
that kind of episode.
I'm sorry.
It's that kind of episode.
Yep.
Oh,
just like the Bitcoiners are the coolest group of people. Like everyone is so smart, so friendly. They're good conversationalists. I mean, there's people there last night involved in, exchanges, security, mining, like a little bit of everything. And people are so knowledgeable and just happy to share. And I love the Denver Bitcoin community. So we have a really good thing going.
Yeah, man, we're gonna miss you when you move. But
I will be starting the satellite down in Taos, New Mexico. And actually sounds like a couple people that were there last night have some friends down there that are into Bitcoin. So we already have a community that just needs to meet for the first time. So really cool. Shout out to everyone that was there last night. Go Bitcoin, and life's tight.
Yeah, dude. Whenever you start that Taos meetup, I'll have to come down. I've been looking for a reason to go down to New Mexico, so now I do.
Hell yeah. Yeah, super excited about the move. Bummed I'll be leaving Denver, but it's cool. It'll be just another place for us. Well, on today's episode, we're going to talk, kind of about sentiment, price, models, hash rate, just kind of current events, what's going on in Bitcoin right now in light of, as you already mentioned, the 50% drop and this kind of strange range bound mid 30s we've been in now for a couple months. And so just kind of looking at what's going on in the space, what people are thinking and saying, and what could come out of this. So I think we'll kick it off by starting with the stock to flow model, which is interesting. It may be Fugazi, it may not be. What are your thoughts?
It's a Fugazi. It's make or break time for stock to flow. I think it was S2F multiple on Twitter. I'm not sure if that's somebody else or the Plan B. I think it's probably somebody else. The stock to flow multiple, which is essentially the stock is the current supply. The flow is the new supply, the rate of new supply coming online. So gold has it, all these physical commodities. It's a convenient way to measure and has been historically run a pretty tight analog to the actual price of Bitcoin. So the idea is that every 4 years when Bitcoin has a halving, the flow gets cut in half. And so that increases the price by an order of magnitude. And so the current stock to flow price is like 80,000 per coin. Maybe even a bit higher than that based on the current stock and the current flow. That being said, we're not, right? We're at like 34 last I checked. And that's I'm probably butchering the numbers here, but I think it's like a 60, 70%, something like that. It's a significant decoupling from the correlation. In fact, it's the largest ever. And so this is either a screaming, I'm screaming at you, a screaming buy, right? Or the model is going to break. And when the model breaks, I thought it would break to the upside. I still think it will. But yeah, that's sort of my take on it. It's
Yeah.
not super encouraging to see it, because you want it to obviously like confirm your belief, I guess. But at the same time, I don't need, as much as I like the model. I think it has some significance. I don't base my thesis of Bitcoin on it, and so
Hmm.
I'm just buying Bitcoin. I don't know, do the same
Yeah.
thing. It's
Yeah.
nothing's changed.
Yeah. I think it's kind of one tool in the toolkit of someone who's, building a position in Bitcoin or trading or what have you. But obviously, it's not gospel, and rules are meant to be broken. It's not a terribly huge sample size. Bitcoin's been around 12 years. We've had good pricing for 10 or 11 years. So, um, yeah. But yeah, as you said, I think it's kind of make or break for the stock to flow model. And for those of you that want more information on this, you can follow Plan B on Twitter.
At
And
100 trillion USD.
yeah, scroll down his Twitter and you'll see all kinds of interesting tidbits because yeah, smart guy.
Yeah, he's got some good stuff. Like all models, I don't, look at them as gospel. However, what I do look at as gospel is this: the Bitcoin white paper. I got the with the foundation passport. Should give them a quick shill. It's
Yeah.
a super dope hardware device that looks like an old Nokia brick phone, and part of the onboarding. Oh, hey, you got one too, dude. Nice. Part of the onboarding with the little welcome package was a leather-bound white paper. So nice touch, team. OPSEC, Bo. OPSEC.
Yep. Cool.
It's a neat device.
Yeah, it's really cool.
So anything else we want to touch on around Mr. Plan B, 100 trillion USD stock to flow, and the decoupling?
Go check it out. We'll see if the stock to flow continues to work or if it just doesn't work. And I think that's that on that topic.
Cool.
Let's talk about Grayscale because that's been I think if you read semi-mainstream media in the Bitcoin space, there's a lot of positive and negative stories, but I think probably more negative about the Grayscale lockup. And for those of you who don't know, Grayscale is the largest trust that holds Bitcoin. It allows you to go to your Schwab account, Fidelity account, and purchase units of a trust that own Bitcoin in an IRA or a simple brokerage account. And they had, so at the beginning of 2021, there was a big run up in the price of Bitcoin, as we know, coincided with a big run up in the premium of the Grayscale Bitcoin Trust. And because it's a trust, the nuance there is it doesn't have to trade at net asset value. So units of this trust do not need to actually represent the Bitcoin that they say they hold.
Unlike an ETF.
Unlike an ETF where it trades at net asset value because there is a perpetual creation redemption process that allows arbitrageurs to keep the price where it's supposed to be set at. So with the Grayscale Bitcoin Trust, traditionally traded at a huge premium. And what that meant is people could create new units of the trust by going out, buying a lot of Bitcoin. They'd only have to hold it for 6 months, just a lockup period. That's how it works. And at the end of 6 months, you're allowed to sell it. And for most people, you could, if you wanted to even be Bitcoin neutral, you can go out, you can short Bitcoin spot, buy GBTC, and at net asset value, when you create the new share of the trust, 6 months later, sell it at the premium. and you're not even expressing a bet on Bitcoin necessarily. You are taking advantage of that premium that you think is going to be there forever.
Right.
So what happened was the market got a little hot.
What happened was
new entrants came in. So we've got like the Osprey Bitcoin Trust and a couple of other competitors, and they have lower fees. So the prestige, the scarcity aspect of Grayscale went away, and it started trading at a pretty big discount. Now the July 18th lockup is a big lockup because exactly 6 months ago was kind of the peak frenzy buying of GBTC. So this is when a lot of new shares had been created, and those shares are going to be allowed to be sold. Now, you don't have to sell them. You don't have to sell them. They're at say a 10% discount. It might be like 8% or something right now. So Grayscale's at a discount to the net asset value, or the Bitcoin that they actually hold. And the lockup is going to allow people to sell these shares of GBTC at a loss if they so wish. Not just a loss because the price went down, but a loss because it was at a premium, or it was at net asset value. Now it's at a discount rather. So anyways, before I go further, what are your thoughts?
I think I need to sell GBTC. I don't know, man. I'm concerned. I'm more concerned that like the investors got wrecked and they're going to panic sell and pull it out of the trust. It's just going to create some cascading liquidations on the exchanges when the Bitcoin open up. Maybe that doesn't happen. Probably will. I like it might cause the price to dip temporarily, of which I'll buy it because I buy every dip. Yeah, what you're saying is so true though, like about how the competition. I don't think they're ever going to trade at a premium again. There's no reason for them to trade at a premium.
No.
Strange that they did, because they don't have leverage. So that's part of why Michael Saylor's MicroStrategy trades at a net asset value premium. They also produce positive cash flow. Grayscale doesn't have that. They charge a 2% perpetual fee.
Yeah.
And there's all kinds of like securitization risks of holding Bitcoin in a security product that add to the complexity of custody, pricing. You have this fluctuation of the product that is irrelevant to or irrespective to the price of Bitcoin itself. For that reason, Mark Cuban should really look at Bitcoin, but for that reason, I'm out on that.
Yeah, I would argue like it's like a pretty convenient way for like boomers to get exposure to Bitcoin, and it might
especially
be
in retirement accounts.
For someone like you especially, it is probably you do feel like you're taking a risk relative to the alternative with their security because you don't really know. But that 2% has to be used for something. My guess is that they've got pretty good security. And I think for most people, it's a pretty easy way to access Bitcoin, especially if you want to own it in a Roth IRA or something like that.
That's where I own it. I don't own it in any regular non-retirement vehicle. I don't see any reason to. If you can own, why own a picture of the castle when you can own the fucking castle?
Yeah. I think that, well, a couple things. I think there's like 9 or 10 applications in for a Bitcoin ETF. Grayscale's one of the first. Kathy Wood is the most recent. So pretty big players that have applied now to create the Bitcoin ETF. Gary Gensler is the head of the SEC, ultimately in charge of approving or disproving these ETF applications. We still don't have an ETF in America. And Gary Gensler taught a course on cryptography at MIT or University NYU or something. I don't know, some university, I forget. So I think that there's an argument to be made that we're maybe within 12 months of ETFs beginning to exist, and Grayscale has already come out and said that if their ETF is approved, they're going to convert the trust to an ETF, and that discount goes away immediately. Will that for sure happen? Maybe not. What's the time frame? No one knows. So it is a little speculative, but my thinking is I'm going to probably pay that 2% fee on the Grayscale I own in my Roth IRA for 1 to 2 years. And I'm going to also close that 8 or 9% discount gap. So the way I see it, I think I will get kind of a boosted return holding my Bitcoin there, but I could be wrong. It could go at a bigger discount, and an ETF is never approved in the States because government can do. So
that's why
that's my thinking. Yeah,
I own it for that same purpose, Bo. It's to play the discount. I do think an ETF gets approved. So when it does, that same arbitrage that you're acknowledging will occur. Yeah, I agree, man. I just like in a perfect world, I would own my own keys.
Yeah.
In my self-directed IRA trust. I don't know. I just think retirement accounts are kind of like antiquated at this point. I mean, part of that is like the libertarian rubbing off on me, but or rubbing or coming out of me, I guess would be a better way of saying that. But I just like I don't see the point in retirement accounts. I feel like fundamentally, well, I see the point. It's to play the tax system to your advantage, but I don't like doing what the government just tells me to do. Like they're like, "Hey, jump through this hoop," and I'm like, "How high do I need to jump, Captain?" Like I'm just like I don't want to play that game, dude. Like they tell me. So like the idea that I can accumulate all this wealth and it's in this special little vehicle that I can't touch. What? I can't touch it? I just like, dude, and as a former financial advisor, like I'm not ashamed to say, but like I, formerly would tout the benefits of IRAs, and I think they exist for a reason, and even in the Bitcoiners world, they can exist and have a place. But if I could start over, I would just not do it. Yeah. And that's why I don't do it anymore. But I think like I'm not to the point where I want to like pay it's a Roth, right? So like I don't want to pay the taxes on all the gains. I already paid taxes. And then on top of that, a penalty is just like, all right, you got me. You got me. They got me. It also keeps me, as you know, it also keeps me partially invested in stocks because I don't completely invest in Bitcoin in my retirement account because I can't. That's literally the only reason. So that's why I don't like it, right? Because they're like, this whole kind of like, oh, you want a Bitcoin ETF? Jump through this hoop. Please, Mr. Gensler. Okay, now we'll do it. That's the problem with our fiat monetary system. It's like you shouldn't have to play favorites. You should. I don't know. I mean, it's such a complex argument. Like, there's reasons that regulation exists. Of course, there's reasons. Like, I get it, but I don't know. I'm just
this is fundamentally why I like Bitcoin. I mean, this is exactly it. I mean, I jump through those hoops. I advise people to jump through those hoops. That's my job. But that's what I love about Bitcoin is it's this really fair savings technology that works the same for every single person. And you don't need to hire a financial advisor to know that it's a good place to save. And you're going to maintain your purchasing power over really long periods of time. And so it's just what's special about Bitcoin. I do want to go back a second and just make the point that this grayscale unlocking that's been telegraphed to occur on July 18th. First off, it's not a forced selling event. No one needs to sell. Right. Another thing is not everyone was simply playing. Well, maybe not,
There's
because
no.
I think the majority of people that were creating the new shares of these trusts during the frenzy earlier this
Wait,
year
let's talk about this.
were playing that arbitrage, but not a lot of institutions were simply trying to get exposure to Bitcoin, and they will hold it while it's at a discount.
So
And
here's something I learned recently, and I want your take on it because we haven't talked about this before.
mhm.
So, listeners, you're getting the first uncut director's cut edition. All right, that was cheesy, but
That's how
all right.
most of this is. Just so the
Yeah,
listeners know.
actually, that's true. We literally we do rehearse. We've gotten better at rehearsing, like how we're going to structure the show, but that's about it. Maybe one day we'll have like a fancy, guest segue, and I forgot what I was saying now, dude. Damn it.
We were talking about the unlocking, whether institutions need to sell, the ones playing the arbitrage versus the ones getting
Oh
Bitcoin
yeah.
exposure.
Yeah. So I learned recently that Bitcoin is not subject to wash sale rules. Who knew? Did you know that? I didn't know that. You know what is subject to wash sale rules? GBTC. Because it's a security. And so, yeah, dude, another reason to buy the Bitcoin asset, because literally if you're down in Bitcoin, and this is not financial advice or tax advice or
I
legal
was just going to
advice,
say, this is not tax advice.
but you can go look it up. I looked it up because somebody told me this, and I was like, nah, it's wash sale. And they were like, no, there is no wash sale. And I went and looked it up, and sure enough, you can sell Bitcoin at a loss and immediately seconds later buy it back. That is a taxable loss to declare. Again, not tax advice, but do your own research and check that out. Because it was something that I wasn't familiar with and I had to do my own research, to which I concluded that, at least of the way the law stands now, it does seem to be the case. But, so the reason I even mentioned that, though, is because of the tax, the wash sale rules. When I mentioned, like, of course they're going to sell. I was thinking, of course they're going to sell because, like, why wouldn't they? They can just deduct the loss and then immediately reclaim the asset right away. Yeah, they pay some transaction fees, but whatever. It's worth it if you're down 40, 50% on a tax basis
That's
without
a good
question.
point. So what they're
But
going to be doing is probably
GBTC,
selling units of GBTC and going out and buying spot Bitcoin.
that's what I'm wondering. So at redemption, though, do they sell the GBTC and then, yeah, that's what they do, right? They sell the GBTC and then they get the Bitcoin back. And then they can,
Presumably
but what
that discount is going to grow. There's going to
could,
be,
and
yeah.
what I'm thinking is that people who have been unable to sell for the last 6 months, who are now underwater on their position, when they get unlocked, since they own the asset and essentially created a unit of GBTC with the asset, when they redeem the unit and get their Bitcoin back, and this is like an open-ended question, like, why would they not take the tax loss by selling the Bitcoin and then immediately, within seconds, purchasing it all back and taking a massive tax deduction for their entity, whether it's an individual or a corporation or whatever? And still, I mean, there's reasons why. I guess that's why I'm saying it's like open-ended question, if you have any thoughts on it. But I wonder if that's like gonna happen, or if I'm just kind of like missing something. But I think, based on what I understand, that seems like a logical. I mean, if I were in that situation, that's what I would do.
I'm hesitant to opine on this because I'm not sure I fully understand the mechanics and the taxation and what these institutions kind of what they're.
Well, it's property. There's no wash sale with property. It's securities. Because Bitcoin is not a security, it's property. There's no wash sale. However, GBTC is the securitized token or securitized trust of Bitcoin. So that technically is a security. So I don't know. Probably like better if we like let the reader or listener do their own research, but something to consider if you haven't thought of that before.
One last thing I will add, and that is, regardless of what happens to shares of GBTC and Bitcoin during these types of events, when it's telegraphed enough, there's going to be people taking the opposite side of it just because they know that the opportunity is there. If you know there's going to be forced selling, or not forced, but you know there's going to be selling, why wouldn't you be sitting there waiting to, capitalize on whether it's a dip in Bitcoin spot or GBTC, and that kind of ties into something I'll talk about in a minute. But before that, we have boating accident of the week.
Boating, meow, boating accident of the week. Brought to you by insert sponsor here.
Boating accident.
Boating accident.
Bo, can you explain what the boating accident meme is to the listeners?
So I'll admit to the listeners, I didn't know what boating accident was last week. I thought when Zach stopped the episode and said boating accident, we were going to be showing you a short video of a boating accident. But my juvenile understanding is that it is people say they lost their Bitcoin in a boating accident when the government comes knocking.
Yeah. Boating, any kind of boat too. Canoe, kayak, paddleboard, you name it. Lost them in all different methods. Exactly how Bo's saying. It's sort of a running joke that, government comes knocking. Oh, I don't have them. I lost my Bitcoin private keys in a boating accident. So this week's boating accident of the week, which is where we feature a prominent figure who is in the media, who makes some sort of, I don't know, whoever looks like they might be a good fit for that. So this week is Cynthia Lummis. Cynthia Lummis was on. She's the senator. She's a senator, one of the senators of Wyoming. She's a Bitcoiner. She's retweeted something of mine before. So thank you, Senator.
She's listening.
She's definitely a listener. Her and our moms.
Our moms.
Biggest fans. And Cynthia Lummis was on CNBC the other day, maybe a week ago, maybe 2 weeks ago. And man, did she commit some horrible mistakes. They asked her about Bitcoin and they said, well, do you have any Bitcoin? And she goes, yeah, in fact, I do. And she's the sweetest too, man. She's just so innocent. And she's like, the reporter, FU reporter, by the way, never asks someone on national TV how much wealth they actually, of course they would, because it's the media. Of course they would. Actually, go ahead. You're just doing your job. I get it. She goes, well, how many Bitcoin do you have? Just like without even, just like it's second nature. And Cynthia Lummis goes, I'm not gonna do it justice. Oh, I think I've got about, I don't know, 5 or something. I'm butchering it, but I think I kind of maybe about 5. Come on, Cynthia Lummis. You ain't got 5. You ain't got 5. First of all, if you do have 5, what the heck are you doing? Because you are a U.S. senator pushing the Bitcoin narrative in the world. If you are just saying you have 5, a better demonstration would be none of your damn business. And if you really do just have 5 and you didn't know any better, I don't believe you. Nice boating accident where you lost the rest of them. So yeah, Cynthia Lummis has 5 Bitcoin, which is $150,000. Yeah, maybe she's telling the truth. I don't know.
She's booked on a Royal Caribbean cruise. She's going down to Haiti in a couple months, so I think she might drop her wallet off of the cruise.
Dude, speaking of Haiti, did you see the president of Haiti got assassinated today?
Yeah.
What? In his home?
I think he held power for 18 months or something longer than he should have and pissed off a lot of people.
Yep. Yeah, so I was reading that. Apparently there was a dispute between him and the incumbent party on when his leave of office was. I guess he's part of our boating accident this week. where it was supposed to be like it was some sort of dispute about is it based on the day he got elected or based on the day he took office, and they had different viewpoints. So anyway, Senator Lummis, I see you.
Yep. Cool. Well, I want to do something slightly educational, just something that I think might help people, whether you're a trader or building a position in Bitcoin. I think that there's some things that I've learned through trading stocks for about 10 years. I've had some successes, some failures, and I think for beginners, whether you have traded a lot, whether you haven't traded Bitcoin, or you shouldn't trade Bitcoin, you should just buy Bitcoin. But I think that something that
I know somebody that needs to hear that.
Not me. Anyways, like if you've heard the saying, buy the rumor, sell the news, like I think that's a good encapsulation of what I'm trying to explain here, which is that when there's a date coming up, let's say Apple announces a special event, they're going to announce a new product, and there's rumors that it's something that's going to sell really big, it's going to materially impact the financials of the business for the next 5 years. Say that happens. That the time that you probably, of course, nothing's for sure, like anything could happen in any moment in these liquid markets, but the point that you probably want to buy Bitcoin is as soon as the rumblings of the announcement happens, because it might trade, let's say the events in 3 weeks. Apple could trade up 10-15% between now and then. And then the day of, when people are like,
almost,
and you got all these newbie traders watching the event on their computer at work, and they're like, oh my gosh, this is crazy. This 3D, the iPhone's going to do these 3D scans. Like, I don't know, I'm making it up.
And that's the time to sell.
And exactly. And the stock's down 4% that day.
Dude, so, you know what that reminds me of? Elon Musk and the Saturday Night Live guest starring for Dogecoin.
Exactly.
All of my normie friends that are like, hey, talk to me about crypto, right? They think I'm interested in crypto, which I'm not.
Yeah.
By the way. But they were like, yo, Elon Musk is going to be on Saturday Night Live. Dogecoin's been going to, from a penny to 50 cents. But, it's going to go to $1 after he goes on SNL. And I'm like, because of exactly what you said, because we have been through the trenches, when I'm like, nope, actually, that's the top. Actually, the top is probably right now, when he announced he was going on Saturday Night Live. And that's actually, I think, pretty much how it played out, maybe within a couple days. But yeah, it's like when people are throwing caution to the wind is when you need to be really questioning your investment thesis or paring back your position. And when people are fearful and having episodes like, yo, the stock to flow model's decoupling and it's going to break, maybe that's when it's a good time to buy. Of course, again, I mean, nobody knows, but I think that sentiment aspect of trading, although you're right, and that I don't think most people can be good traders because it requires an insane amount of emotional discipline and objectivity. And part of that objectivity is admitting you suck at trading. Mm-hmm. But if you can get good at trading, sure, you can do wealthy, but you can become wealthy. But like with an asset like Bitcoin, that's sort of the appeal, right? You don't need to necessarily sell, but be cognizant that the same mania, euphoria, and despondent fear phases play out in all things, not just markets, not just Bitcoin. Plays out in baseball tickets, like it plays out in, you name it, like, like consumer goods and like graphics cards. I mean, it's kind of related to Bitcoin tangentially, but graphics cards, like they've been sold out. People are paying like $2,000-$3,000 for them now, because the demand is there. Anyway,
so if you're someone who's looking at this Grayscale event as an opportunity to to buy Bitcoin because it's so sure it's going to fall, whatever. Or, that's just one example. The fact that the date, it means everyone else does, right? Like, I just see too many people waiting for these catalysts. They've got some date in the future for something that they know is going to happen, right? You're not the only one. And the market's going to sniff it out, and it'll probably do the opposite of what you think is obvious, because you think it's obvious. You need to be a little bit more, show a little humility, I think, when these types of things happen. So I think looking at like the Grayscale event, I mean, I wouldn't be surprised if it pops 5% just to defy all expectations on that day. So we'll see how it actually plays out. Anything can happen, but I would just be wary of waiting for certain events to buy or sell assets because you think something's coming.
The key to becoming a good investor is knowledge. It's not hard. Literally, it's just learning. Now, that is a broad, I made that statement broadly intentionally, but that's learning how markets work, learning how emotional cycles work, learning how you respond to said emotional cycles, learning, like, if you want to be successful, you said something I really liked a minute ago about, like, if you know the date, everybody knows the date. The key to being successful in investing is you have to have some sort of edge, an informational edge. Now, whether that's information about a company, whether it's information about an event, whether it's information about the weaknesses of the people you are trading against,
right?
All of that information is helpful. And there's a reason why Bo and I are so confident about Bitcoin. It's not just, like, personally speaking, I've got 10,000 hours invested in financial markets and learning the emotional side of trading and investing and managing finances, and 10,000 hours of studying, knowledge, and experience easily. I feel like I'm being conservative if you think about my college years and teens when I was reading and all, just before my career. And then another probably several thousand hours of Bitcoin only focused education, learning how those two systems cooperate, how they clash, and how they are, similar and sort of depend on each other. And so when all this shit comes out, like the FUD, there's something about a lake in New York getting too hot because of Bitcoin mining. Meanwhile, New York's having record heat waves. It's like, the more knowledge you have about the subject, but also the emotional context surrounding said subject, the more objective you can be in your decision-making and investing approach. I fully believe that.
Stay humble, admit when you're wrong. And you kind of have to, if you're really going to be a successful trader, I think it's probably easier in Bitcoin and crypto if trading is your thing. It's not mine, but I think those markets are probably a little less efficient. You're going to have a really hard time being successful. And the way that you do it is by acting not like a human. So good luck.
Right. You know why I have a competitive edge in Bitcoin? Because I have a piece of understanding of information that 99.8% of people don't get, and that everything is going to be priced in Bitcoin someday. Everything. That concept, if you're not getting it, it's okay. It takes a long time. It takes 10,000 hours of understanding how the financial system works and thousands of hours of understanding how Bitcoin works and how it could possibly replace or even kind of morph from the current system. And so, like, that is my advantage, knowledge, right? And just commitment to the subject matter. There's no shortcuts. And the thing you said about information, less efficient markets, is true. The more efficient markets you're playing, the more competitive it is, and the less room you have to capitalize on information asymmetry. And so it's strange to me that although we literally do this podcast And we're not the only ones who talk about this subject topic, that people don't see the thing that's right in front of their face, which is that Bitcoin is not an investment. That's why it's not a security. Bitcoin is money. And money is not priced. Money is what you price things in. Drops them.
Oh yeah, mic drop. So Zach, before you wrap up, I do want to ask you about the hash rate, because I think I would argue that while we've seen Bitcoin get cut in half and all this fear, uncertainty, and doubt for the last couple months, and it's just hasn't really bounced, it's just kind of languishing.
Yeah.
I think I would argue that there were some huge bullish developments. So it's like, if you're, equating this to a company, it's like the business fundamentally is getting better, but the news, the media is, making it out to be worse. And so when you get that divergence, it's going to create an opportunity, and Bitcoin could go lower, could go higher, whatever. But I would argue that there's some pretty positive developments besides the hash rate. And so do you mind explaining what the hash rate is and how it relates to the price of Bitcoin?
Yeah. So to solve a block, you have to put a random nonce into the puzzle. If you put the right one, you get the Bitcoin. The more people that mine, the harder it is to solve that puzzle. The less people that mine, the easier it is. That's how Bitcoin ensures its monetary policy supply schedule, no matter what the mining conditions are. That's unique. That is like, I don't want to just gloss over that, actually. Like, the reason Bitcoin's monetary policy is enforced is because of the difficulty adjustment. Because if there wasn't, blocks would start coming in at like way faster than intended. And the monetary policy, instead of taking 140 years for Bitcoin to, fully implement, it would take maybe less. Not only that, you wouldn't be able to predict the schedule of it. So we need that predictability. So the hash rate is the amount of computing power that goes into mining at any given time. The number of hashes. It was like 180 terahash. I think it goes like giga, peta, tera. I might be missing one in there. There's a lot. I think there's exa. I think exahash is one in there that I'm missing. I forget how they go, but I think exa is below tera. I don't know. It's one or the other. Anyway, they were at 180 terahash, and now we're about 90. So 50% drop. It was as low as 80 for a time. So that's a big drop. In fact, more concerning to me than the price of Bitcoin's drop, because the hash rate is what secures Bitcoin against state attacks or non-state attacks. But at this point, the hash rate's still such a magnitude that even like a non-state attack is pretty much infeasible. But, if the hash rate falls by 50%, and then let's say that rather than that hash rate move and still be under private control, because we know the hash rate existed, right? Because it was on the network at one time simultaneously. So we know that miners are out there. Assume some get destroyed, lost in transit, whatever. Then like, fine. Eventually, I'd say within 2-3 months, the hash rate will pick back up, right? They've got to redo their whole operation. These aren't just like plug in and go. You've got like build energy grids and shit to support the kind of infrastructure we're talking about. So I don't think it's just going to come back on overnight, but I do think it will come back on. The only thing that I'm concerned about is how much hash power fell off and how it was all in the same location, allegedly. Because what that says is, hey, if 50% of the hash power fell off the network, where is it? Who's got it? Did China seize all of it? No, they didn't. Let me stop that now. No, they didn't, because they can't. It's literally the scale of a thing like that. A nation state. Nation states are clumsy and bad at shit. Like, look at all the ghost cities in China. Like, they didn't seize everybody's Bitcoin miners. They probably did seize some. They didn't seize 50% of the network's hash rate. But to play devil's advocate, assume they did somehow. That would be super concerning, because now we've got a single actor who has a motive and intent to compromise the security of the blocks being produced. Could effectively render the blockchain useless forever. Now, we could hard fork it. Be possible. Probably would crush the price of Bitcoin. I don't know. But I don't think that's possible. And here's the other alternative. All right, cool. If that's your biggest threat to Bitcoin, fine. Sell your Bitcoin and go live in the fiat system. Oh, okay, no. I'll take that risk because it's a low likelihood risk, and Bitcoin's an asymmetric bet. It's either going to replace global money or it's not. And I'm not going back to fiat money where government can devalue my labor over time, right? If I'm getting more, like I was just talking about, 10,000 hours, right? Like thousands of hours in Bitcoin. Like my time is worth more now than it used to be because I am a lot smarter than I used to be. And I'm more refined in and like I've built up certain skill sets. So how the hell am I paid less? What? That's what you are signing up for when you agree to denominate your entire year's worth of work in a single fiat number. Because in January, you are getting paid way more than when you get paid in December if you're looking at your purchasing power. So remember, it's not about the money, it's about the purchasing power. Always. Doesn't matter what money it is. It's always about purchasing power because money is not the end. Money is the means to the end, if you will.
Yeah.
So, all right, that's my outro.
Cool. Want to wrap things up?
Yep. We appreciate you guys. Again, this is episode 5, the Value Stack. If you want to follow us on Spotify, I think you can follow us on Spotify, on Anchor. You can subscribe to our YouTube channel where the video is cross-posted. So if you're listening on Spotify podcast, it's also on YouTube where you can see our beautiful faces and Bo's Buy Bitcoin sign. And what else? If you're
aren't you doing I was going to say, aren't you doing a presentation for financial advisors?
Yeah, so we're doing Casa. I work at Casa, and we're a multi-signature Bitcoin wallet company for institutions and individuals. And we're, in the context of this conversation, of course, with Bo and I's background as financial planners, we have a pretty unique angle where we're able to sort of partner with financial advisors to help them, keep the Bitcoin assets that were once looked at kind of separate from the rest of the portfolio and really include them all in the big picture. And I think that's going to be more and more because that's part of the reason we started Value Stack too, is we really want to bridge the gap between the traditional financial world and Bitcoin, which is the new financial world, in my humble opinion. Although I'm not always humble as I want to be. So I promise that this webinar will be humble though. And we just are going to talk about some different ways that you can incorporate kind of like what we talked about today, even. So ways that Bitcoin and IRAs, actually you can take physical custody of your Bitcoin and IRA, types of exposure like GBTC. Basically, if you listen to this podcast, you really don't need to attend this webinar. So, but thanks for listening to this podcast in that case. So, I'm feeling really bullish, Bo. I think the fear is back. I think the stock to flow is decoupling. I think payday's coming soon. Congratulations on your achievement this quarter. You did a great job, bro.
Thank you.
And I'm just glad you're listening. Glad we're still doing this. This is 5 episodes in. Appreciate all the subscriber, listener, followers, whatever it's called, depending on what platform you're listening to it on. So, any final thoughts, Bo?
Stack sats and life's tight. How predictable is that?
I literally knew you were going to say life's tight at the end. Bo is, if you ever hear life's tight in the wild, look around, because Bo's probably right there.
Yep.
I've never heard anybody else say that, but I say it all the time now because of you. So don't ever forget the impact that you can have on other people, however small. So make sure you orange pill your friends. They might actually care.
Oh, I just quickly, I very successfully orange pilled someone after about 6 beers. That was I'm proud of that. Had some help from Colin. Yeah, we
last
went
night?
hard. Yeah.
Were they part of the meetup, or were they just at the bar?
They were part of the meetup, but very unsure. Unsure, but very inquisitive, asking the right questions, and we did a good job of letting them ask the next question and kind of filling in each other's gaps. And yeah, it's fun. Orange pilling people's fun.
Dude, it's my life's work at this point. I it's meaningful. That's the underlying, like, we don't make money on this podcast, but I do it because I enjoy doing it. And hey, if there's one person, like you just acknowledged, if there's one person out there that Bo and I are the key to your Bitcoin rabbit hole, let us know. I mean, you don't need to give us that satisfaction, but it would certainly, we want to know, we want to know that people like what we're doing. And that way, if people don't, or if it's not, resonating, we can kind of change it up a little bit and make sure that we're putting out content that you enjoy, that you want to keep coming back to week after week to listen. So, thank you guys again for listening.
Follow BTC BAP and Shaper Funds on Twitter, and thank you for listening.
We'll see you for episode 6.